Okay guys, it's Wednesday the 8th of November and it looks like I'm just about to be triggered into a trade on the FTSE 100. So my signal candle was at 8:20 a.m. Basically what I was looking for, what I went over with subscribers this morning was that after a strong downward move yesterday on the FTSE, if we pressed up into either this zone right here at 7,532 or this zone up here at 7,555, we could look for resistance and potential bearish continuation. It made sense to look for weakness coming back into the market if we press back up into this level. Now, early morning, we have just rocketed from 8 a.m. all the way up into this zone. Then we've shown that little bit of weakness. I got my entry signal and I've entered below the low of the candle. So for this live trade video, well, the first thing is I usually record the trade that I take on the Tuesday and I post it up on the Wednesday. However, the last 2 weeks, I have not had any trades on a Tuesday. So 2 weeks ago, I had a trade Monday morning. I had a trade on Wednesday, which was ended up being a break-even trade. And then I had a losing trade on Thursday, a winning trade on Thursday. And I didn't trade on Friday because it was non-farm payroll. And then this week so far, I have had 0 trades apart from this one I have just been triggered into. So it's just been it's not been a quiet market. I mean, the FTSE has been moving, but in terms of getting into good quality setups, they just haven't been there for me. And when that happens, I just don't take the trade. What I actually found in the past, certainly over the last couple of years, is that on a Tuesday, because I am recording the trades, I would tend to take slightly riskier setups, and purely because it's almost like there is a little bit of pressure to get the video. And so I can post it up on the Wednesday to show you guys a live trade. So I'm trying to really iron that out. It's one of the little weaknesses that I've noticed in the way that I trade. And because, I'm only looking to take the really highest quality setup. So not had a trade for 2 weeks. So I've just decided to record this one on the Wednesday and post this one up instead. So I'm continuing on with that cautious trading approach that we've been going over in the last couple of weeks. So I've just done the exact same thing. We're risking £300 on the trade once again. I'm going to approach the trade in a cautious manner. So really I'm looking for it to come back down into really at least the 7,521 level. However, we also have an area of potential support at 7,524. So let's just turn this into a purple line. I tend to mark out management points using a purple line. So if/when we see the market making that move down into this level, what I will do is I will then start to consider the trade at break even. So if the trade then moves back up against me, gets to my entry, I would just come out of the trade. It's the exact same thing that we've been doing for the last couple of weeks. I'm trying to just show you that you don't need to just approach trades whereby you get into them and then you're just holding that trade blindly until it reaches a predetermined target. There's also ways to approach trading whereby, your main focus is protecting your account. It can be useful when you have a smaller account, but it can also be very useful for things like your emotional state when in trades. If you really struggle to manage trades, to handle trades, and you find yourself panicking, making mistakes, just being a little bit more cautious with the trades can be very, very beneficial. So I'm really looking for it to come back down into these levels. Let's just mark the lower area right here. Looking for it to come down to this level. If we hit the 7,521 area and we just spike down into it, potentially we'll take partial profits. So what do we have? We have £22 per point. Let's bring up our calculator. So we want to do 75% of 22 would be £16.50. So I'll just get that set up. So £16.50. I want to make sure you got that stop and the stop and the limit order unticked if you're using Pro Real Time, because if you don't, all that will happen is you will hit to take partial profits and it will enter you into a second trade. So what we're going to do, if the market comes down into these levels here, we'll close out 75% of the trade. We'll look to run the remainder back down toward this previous little swing point at 7,514. Okay, so let's see how we get on with this one, guys. What I will do is I will pause the video until we start to see some sort of movement one way or the other. Okay guys, so the market has came down and tested that management point, which is right here. So now I'm looking at this trade and considering it at break even. Now with cautious trading, I like to go over this with each of the videos. You know, the frustrating part about cautious trading is that you will have a lot more times when the market bounces off of these points, comes back up and takes you out of the trade. But what it is doing is it's protecting you from a lot of losses. So what tends to happen is you have, you know, a few break-even trades, but then you also avoid the ones that would touch this level, reverse and stop you out. Very beneficial if you struggle to pick the trades when they hit a level like this. You struggle to pick when you should hold the trade for the move down or when you should just get out because it's starting to hold at the level. Very, very beneficial. And then what you're doing is you're looking to catch the ones that just come down, maybe bounce around a little bit, comes up toward your stop, and then it just comes through and gives you that nice profit. So that's exactly what we're looking for with this one. I should also mention when I am looking for the market to come down, certainly into the first target point, I don't bring the stop down physically to break even, just because, you know, if it pops back up, it takes you out a little bit early because of the spread. But once it gets to that first target level, if it gets to that first target level and I've closed partial profits, then I would just bring the stop down and sit it there, because then it means, you know, you can get away from the computer. Okay, so the market is just coming back down to that 7,521 level. We'll see how we react when we get here. Really, you know, anywhere sort of 8 to 9 points, 8, 9, 10 points, I will close out the partial profits. So what I'm doing is I'm just watching the market. It's coming down. It's a daily support and resistance level, so you would expect the candle to react somewhat. And I'm just watching to see if we do get that nice strong move down. If we do, we'll just close out the partial profits as it is coming down. Again, all part of trading. You know, when you're looking to take partial profits or when you're looking to take full profits, don't be too concerned with, especially if you're day trading, because, you know, you're dealing with a lot smaller amounts of points. Don't be too concerned if the market comes down, hits your, let's say it's hitting this 8 points, but then it starts to move up against you and you end up closing out for 5 points. You know, you don't want to beat yourself up too much for things like that. It's very difficult to get out of a trade exactly, you know, on a sell at the lowest point. It's very difficult to get out exactly at the highest point on a buy position. You know, you just have to accept that it's part of trading. All you're doing is trying to get out when the market is at a sensible level, and it's when it's giving you that clue that, you know, if you hold the trade any longer, it's just going to move against you, potentially take you out of break even, potentially take you out a little bit early. Okay, so we're down at 9 points. We're at about 9.5 points there for the partial profits. We're going to bring the stop to break even. Just put it a little bit below. It's just that's, I suppose you'd call it part of my trading psychology. I like to have the stop when I bring it down just below, because what that means is if we go up and if we have a very fast move up, we're very unlikely going to have a very small loss on that second position, and what tends to happen is you come out with a very small profit on it. It's just, you know, psychologically, especially when you're looking through your P&L, it's a lot simpler, or it's a lot nicer, sorry, to look at lots of small profits than lots of small losses. So all I'm going to do now is manage this trade. If we see some support at 7,516.5, I will come out of it, but really looking to bring it down towards 7,514. Hopefully we just see a nice strong move down relatively quickly. Also, if we start to get strong bearish sentiment, I would consider coming out of the second portion also. What I'm going to try and do, and hopefully, is get this video edited and also get it up on the Wednesday. So it is still the live trade video on the Wednesday, but, you know, we need to see how it goes. If the trade completes quite quickly, I should be able to do that. Okay, so the trade completed relatively quickly. Came down toward that target area, closed it out around about 15.5. So let's just have a quick look at that one. If I can remember how to do this. So £233.20 on the day. Very, very quick trade. And this is what I'm talking about, you know, with not only with cautious trading. So with your cautious trading, as I've mentioned, it can be very frustrating if you're taking break-even trades. And the reason I'm showing you this is purely to show that you don't just need to follow the textbook rules. Certainly not the crap that you read in trading forums that say you have to just get into a trade and wait for 1 to 3 risks to reward or you'll never make it as a trader. You know, it's you know, you need to find what works for you as a trader, and it's all about finding something that first of all works, secondly, you can execute efficiently and effectively. There's no point in doing something that every couple of weeks, because of the trading plan, it's causing you to have too many losses, and it's causing you to panic, and then your emotional trading things. It needs to be something that works for you. I'm trying to show you there's lots of different ways to do that. Also, with taking your setups, it can be very frustrating if you don't have them on certain days. As I've mentioned, last week, very quiet week. On Thursday, especially when I had the losing trade, the likelihood for me was then to end the week down by about 0.3%. There was another trade later in the Thursday which bumped me back up to around about 1.3 to 1.5% on the week. So it's not fireworks. It's not nothing to start jumping around and cheering about. But that's what trading is. It's all about just waiting for the perfect setups, because if you do that, then you are going to grow your account. But if you don't, if you start trying to be gung-ho, jumping in, jumping out of markets, I see it all the time, and you see people posting up huge profits that they do like this, but then, in a couple of years, they're not there. They don't exist anymore because they blow their account. Treat it as a business, guys. Always protect your capital. And as always, I hope that was helpful. Hopefully you're all having a good trading week. I'm James Orr, and thank you.